All right. Hello, traders. Mark here. Mark P Markets. How's everyone doing? All right. So I'm not simulcasting today on TradingView, which means I can spend more time answering your questions. I'm only going to be doing that like once a week, and it gets a little crazy. So that's why I can't answer everyone's questions all the time. But anyway, all right. So let's talk about what's going on in Bitcoin today. Let's talk about the stock market. I saw some great questions in the chat room that I wanted to address about that. And then we'll talk about the dollar and gold. Okay. And of course, if you're new to this, please share your symbol or your market in the chat now so that when I get to the chat, I can go through the symbols quickly. If it's a coin that you would like to see, please put USD after the coin. Okay. So that I know it's a coin and not a stock. All right. So with that said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let's start with Bitcoin. Again, I'm going to try to keep my analysis portion. I'm going to try to keep it as brief as possible so I could spend more time on your questions. Again, the title of this video is how to trade around this Bitcoin conflict. I mean, that's really what I wanted to address because I've been getting a lot of questions. I mean, look, Shay Shank asks, Bitcoin lingering in resistance label. What will be next? Okay, so this is a very conflicted spot for these markets. Okay, now this box that I have on my chart here is a reversal zone boundary. It's a high probability area where price is likely to fail or fake out. Doesn't mean that it will. It just means that there's a better chance that if it's going to, it will happen in this zone. As we can see previously, a few weeks back, it failed there. Okay, and then you have this failure price action here, all these candle tails over here. And here we are again, hesitating in the area. So, when you see something like that, again, this is about risk, right? People always asking about reward. How much can it go? How much money can I make? And all this and all that. But the focus is on the wrong thing. You should be focused on risk. Good risk management will lead to returns or positive returns over time, right? Positive returns are a byproduct of good risk management. So the focus should be risk. The herd doesn't do that, right? They're just reactive and they just want to make money. So when you have that type of mentality, it's very hard to win in this game, especially when you're faced with randomness. The random nature of all markets turns this basically into a casino for those who cannot control themselves. All right, it's like a slot machine. So that's not what it should be. You're full of hope, you're full of fear, you're full of greed, and this basically becomes like a gambling game, and you're only going to get yourself into trouble. So my point with Bitcoin is, how do you trade around this? You don't. All right. For a swing trade, and like analysis that I sent out earlier, I talked about rules, right? And I've mentioned it too in TradingView. Having rules is what really keeps you out of trouble. When I send out swing trades in this thing, I'm following rules, right? Nothing else. I don't care. It doesn't matter what I think. It doesn't matter what the experts think. It doesn't matter what anyone thinks. What matters is, does the price action fit within the boundaries of the rules that I have defined? The rules were created to keep me out of trouble, okay? To help me not buy into resistance areas and to help me focus on opportunities that are high probability or most likely to go my way. Buying at resistance levels is not such an opportunity. Now, it may go, it may break out. This thing's going to need a catalyst, okay? What you may see in this situation right here is, we have this little price action consolidation going on, this little tiny price action stuff inside bar today. You may get a little consolidation and then break higher, okay? And it may break out of this zone. If it does that, it's possible to see 66K. It's possible, but I'm not interested in that. You know why? Because if it fails here, the question is, on the time frame that I'm trading, what kind of risk do I have to take? Well, I have to take about 8,000 points worth of risk. Why so much? Because the support is here. This is the high probability area where I should be buying Bitcoin, okay? I didn't send out the signal back here after the fact. Of course I should have, but I didn't like this candle. So, we missed it. But okay, look, we're not going to catch them all. The point is, this is the area I want to be buying, not up here. So yeah, we're going to miss some. Now, if this thing breaks out without me, I'm not willing to risk 8,000 or 10,000 points, because now this thing has to fight through this zone. It has to fight through 61K and then hopefully reach 68K to justify my risk. I'm not willing to take that chance, okay? Now, again, it's for a swing trade. People that day trade this, it's a different story. I'm not here to talk about day trades. Your risk would be a lot smaller with a day trade, but of course, your profit potential should also be relative to that time frame. That's where a lot of people go wrong. They say, okay, I'm going to put my stop right below this candle, but I'm going to look to make 10,000 points. Since that's not proportional, what most likely happens more often than not is you get stopped out often. Okay, and then people ask me, well, how come I get stopped out so much? Where do I place to stop? Well, if you're not placing them in proportional areas, you're going to get stopped out a lot. All right, so the proportional area here is that 53 to 50K area, and we have to wait. So that's how you trade. That's how you trade through these conflicted areas. You look at the reward risk, you look at the probabilities and the potential scenarios, and you say, okay, well, what makes the most sense? Where is probability most in my favor? That is in that lower area. So we have to wait. Waiting or staying flat is a position, believe it or not, okay? Because you're not putting any risk on. Now, we have a swing trade. We still have 1/3 of our position that we've been in for weeks, and we're just going to stay in that. There's no reason to get out, right? There's no sell signal here. There's just no reason to put on a new trade or send out a new trade. So I just wanted to be very clear on that, all right? And if you have any questions about that, please let me know. All right, now, let's jump over to the stock market. Had a lot of questions about this. Let me know if you have any questions about the altcoins as well. So here's the NASDAQ, right? And there were a couple of questions in the chat room about, is there an inverted head and shoulders here? There was another question about how's NFP, like any idea what they're going to say tomorrow doing the non-farm payrolls report, which comes out at 8:30 a.m. Eastern time. So there's no way to know what they're going to say. In fact, most of the time, I have no idea what they say. I don't even watch the report. All right, what I'm interested in is how the market perceives the report and how the market trades on that report, but not during the report itself, okay? Because that you get a lot of reactive type of trades. I want to look at the close of the day tomorrow. That's what's going to help me determine if the market really likes that NFP report or not. So I don't get wrapped up in opinions. I don't get wrapped up in hope or this or that, whatever. It's either the market does this or it does not. So that's how I look at NFP. So again, it doesn't really help to read the report. It doesn't really help to try to become an economist to interpret the report. And it doesn't help to apply any logic to any of this because we're facing a random environment. All markets are highly random. People don't want to understand this, right? They're highly random, which means they're messy. They're imprecise, and they're going to be very irrational at times, or they're not going to make sense in terms of logic. So you have to keep that in mind. So based on that, we have that SQQQ position, which is looking to benefit from a NASDAQ pulling back. And the NASDAQ gave us this buy signal the other day, which I mentioned. And I didn't adjust the SQQQ. I said, we're going to stay in it because I want to see how this market plays out. I don't react, all right? So here we are now. The buy signal followed through, and now we are testing this significant resistance area that dates back to like February there. And it looks pretty strong, right? It looks like we're going to close pretty strong. What's this thing up today? Another 198 points. It was up like 200 points yesterday. And perhaps it's on all the inflationary talk, right? There's going to be another infrastructure nonsense, whatever all that nonsense is, it doesn't matter. Everyone wants to tie logic into it. But again, if the market is pricing in inflation, which is what it looks like it's doing, well, then the market is likely to go higher. Now, the S&P broke to a new high today. But here's my point about the SQQQ. This market here, the NASDAQ, needs to clear this resistance. We haven't cleared it yet. We're at the resistance, but I wouldn't want to buy anything here. You know, we had our trade of the week was doing pretty well. We'll take a look at that chart in a moment. But that was based, you know, on a lower NASDAQ. So here we are. Maybe we follow through. Maybe we don't. I don't know. The market needs to provide the proof. This is not proof. Someone asked, is this an inverted head and shoulders? Well, we can argue that it is. and the broader trend is bullish. So there's a lot of bullish information right there, right? You have the shoulder over here. Here, let me highlight those. That's a good observation, by the way. So you have a shoulder there, you have the head over here, and you have the shoulder over here, and here it goes, right? Trying to break higher. Okay, fine. Market wants to be strong, but we see how NFP does. NFP may knock the wind out of it. If we get a red candle off this area tomorrow, I'm going to hold on to the SQQQ. If it closes above the resistance and it closes decisively strong by 3 o'clock, I see this thing with another solid green candle that's looking like this. We'll be at 13,400 or whatever. Then I'll probably close the position for the loss. There's no point in holding the whole thing, and watching it just lose more and more money if the market is going to work its way to a higher high, which it may want to do. Now, in an inflationary environment, stocks like inflation, right? Because that means there's more money chasing them. So take a look at this, US 10. This is the 10-year note. This is a sign of interest rates, okay? Now, this trend has been generally bearish, but look at today's price action and look at the pattern. That's a double bottom, all right? That's a long signal. If I were buying bonds, I'd be going long bonds if I saw that, all right? That candle right there, that's a long signal. So that implies interest rates going lower, which again, that goes along with the inflation scenario. Now, this trend hasn't changed yet, though. That's what we have to keep in mind. Just because there's a double bottom and just because there's a bullish candle doesn't mean it's reversed into a bullish trend. It needs to take out this resistance over here. So if it can't do that, then this is just a big fake out. So we have to see. But if I was an aggressive trader and I was in the bond market, I would give that a try for a long. I mean, you have a nice double bottom there. So at least see if it breaks that resistance. If this thing changes the trend, which can take a few days to a few weeks, and that keeps interest rates in check or interest rates going lower, that's in line with inflation. All right, so you have to keep that in mind. I don't talk about economic stuff very often because, again, that's where too much logic can make things confusing. But when it comes to interest rates and inflation, it's something to just be aware of, because when these things start lining up with it and they start trending along with it, you can't fight that. Okay, so just something to keep in mind. Hey, Michael, thanks for joining us. All right, cool. So that's what I have to say about that. Let me jump over to the dollar and gold situation, right? So that's the stock market. Let me know if you have any questions. Actually, before I do, let me show you SPX, right? The S&P 500, new highs. So when you see this, again, you turn on the news, the mainstream news, they're going to be celebrating, oh, the S&P 500, new high, stock market's doing great. Yeah, buy it now because you're going to miss out, and blah, blah, blah. It's only going to go higher. Well, this is probably the worst place to be buying stuff. All right, this is definitely not a bottom. If anything, it could be a top, but we don't know. A top is not a single candle. A top is not a single event. A top is a process. So all I know is buying here at these prices is very risky, right? For swing trades. Now, that doesn't mean you avoid buying at all. And this environment is most appropriate for day trades. Why? Because you could take advantage of this short-term momentum. You could take your profit and you're out and you're not exposed to the broader risk, which there's a lot of here. All right. If this candle turns tomorrow, if that NFP has a negative surprise, which again, I don't know, it's up to the market, and we start taking out supports, that's where people are going to get caught, right? Because right now everyone's complacent and they think the market is just the easiest thing in the world. So just something to keep in mind there. Let's take a quick look at the trade of the week that we sent out, BLNK. All right. If you're not part of the trade of the week thing, you should just join up as a free member. Each week we send it out by email. Now look at this thing. Today's high is 44.34. All right. Target one was 44.50. I don't know if anyone got out near that, but it missed it by like a few cents. That's ridiculous when it does that. But hey, it's the market. The thing is, look, it's following along with the market. The market's doing its thing. This thing is trying to do its thing. Okay, great. I hope some people are in that. But we don't know how far this is going to go. That's why we put these profit targets where we do. Take some money off the table while you can, right? How about, what's the other one? FUV. This is one I shared in the chat room. This is NVIDIA is a top semiconductor, right? It's not a It's not a FANG stock, but it's in their league. It might as well be. Look at this, right? Look at this. All pushing higher, breaking out, but they're not making higher highs, right? We're not up in here. So there's still potential for a fake out. We have to keep that in mind. Like I said, no reason to go crazy here. Just take it slow, right? That's why we haven't been sending out too many trades. Now, gold. Let's take a look at gold real quick. I sent out this one yesterday, right? Today's high is 1730. The entry on this, as you can see, do I have it on this chart? Yeah, look, you can see the gold information, 1720. So this went out to our members yesterday in the evening, like around 6 o'clock or whatever, and you can see, nice push there. That's what you want to see after you get into something, by the way. But the setup was there. Double bottom, all right? We had the candle close, right? The green candle close, nice reversal. And the thing is, people say double bottom. Yeah, double bottom in a broad bullish trend. The bullish trend dates back to, like, you know, the summer before, as you can see, August, July, way back when. And we're basically back in those same price area. Why was gold at 1670? I don't know why. It doesn't matter, right? People always want to know why. All I know is it's an attractive location. Now, we've had some gold positions before. Some recent swing trades stopped out, but we've bought the mining stocks along the way, right? I've always encouraged people to buy the mining stocks, but not to get overexposed. And the mining stocks were ahead of this move. But anyway, this is a nice move. I also said, if you won't like the CFD, because not everyone can get into the CFD, AG would be a good alternative. Look at the pattern on AG. Now, AG is pushed up today. It's at 1632. It was as low as $16. You know, this thing is, I may put something in the chat room tomorrow. I'm obviously not going to send out a text or email on this one. But, you know, just so I think you could still buy this. Because, again, it's an alternative to the XAU swing trade, right? But your stop is going to have to be below this low at 1494. So you figure around 1450. So you're looking at about $2 of risk. When this thing goes, by the way, you can see it goes. This was a short squeeze situation when it went to 24, like in one day. So I definitely like this as an alternative to buying XAU. It's a silver mining stock, but wherever gold goes, silver is going to be right behind it. All right, so Maria, to answer your question real quick, if you look at the links in the descriptive portion, if you just click on show more on the bottom of this video, it has all the links to go to our website. You could sign up as a free member, or you can, if you want to become an active investor, we have a 7-day free trial and all that stuff. So all the information is there. So anyway, so those are the things that I wanted to touch on as far as gold, silver. I mean, look, wheat and precious metals. Look at this, right? Look at this nice move today. We were getting into this thing, you know, all during here. Let me show you. All of you know, many of you know who follow my streams, know that I've been calling wheat and precious metals long, 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 buy more, average into it, all in that messy area, okay? And look what we have here, a higher low. Gold doesn't have a higher low, but this thing formed a higher low, and look where it is now. Beautiful. All right, so now we're going to have, looks like it's going to go for the breakout at 40.5. That would be a buy signal for those who, you know, who react all the time. We're in it. I'm in it. There's no reason for me to buy more, but whoever bought into this, beautiful. Right now we let this thing do its job. And as gold, if gold could make its way back into the 1850s, 1950s, this thing should do pretty well. All right, and this is a longer term trade. This wasn't a swing trade. Same with NEM, right? Another one. So those are the alternatives. We've been talking about those for a while. You have to have the courage to step in, but also you have to be able to manage the risk, right? Wheat and precious metals is a $40 stock. You don't have to sit there and buy 1,000 shares, right? You buy what is proportional to your account. You figure out, okay, look, I only want to invest $1,000, and then you buy it incrementally. So that would be something like, you know, what is it? What is $1,000 of wheat and precious metals? What is that, like 50 shares or whatever? I mean, 100 shares would be $4,000. So 50 shares would be $2,000, right? So it'd be like, what, 10 shares then, or maybe 12 shares. But hey, if that's all you want to invest, you can buy 1 share at a time, right, at different prices, or 2 shares. But people don't realize that, and they just buy, oh, I bought 100 shares. Meanwhile, they only have a $10,000 account, and they just put, you know, half of the account practically, or more, you know, almost half, into one stock. Not a good idea. Okay, that's too much risk. Anyway, so those are the things I wanted to point out. So let's get to some questions here. And again, if you're new to my stream, please share the symbol you'd like me to analyze. If it's a coin, please put USD after it so I know. And I'd like to spend some time with that now. All right, so everyone, again, let me know if you have any questions about these things that I covered. But that's, pretty much what I'm looking at. Again, I'll get some more specific levels on AG, and I'll share them in the chat most likely tomorrow. Okay, so Shayshank, good to see you. Okay, so I answered that. Okay, hey, Mel, nice to see you. Gabriel. Okay, yeah, right, nice. April. Michael, yep. Kamal. Karthik, all right. I hope you're ETH. Okay, so Ethereum. I was looking at Ethereum earlier. Someone had asked about it. And so let's take a look at Ethereum here. This is a tricky spot for Ethereum. Here, let me see if I have a chart with some levels. There we go. So this is a tricky spot for Ethereum. Why? Why is it so tricky? Well, for one, Bitcoin is fooling around near resistance. So is Ethereum, right? That $2,000 level is it's a whole number, psychological resistance. Now, Ethereum has pretty much been in this consolidation range. The broader trend is bullish. Theoretically, this thing should go for the higher high, okay? Theoretically. But if Bitcoin fails, then this thing is not going to go very far. So this is what you need to consider. If you're not in Ethereum, this is not a good place to buy it. You're taking a lot of risk because this thing, the range low, or at least the middle of the range, forget about the range low, the mid-range, you're looking at 1704, right? That's the middle of the range, which is very likely it can test, okay? It's 50-50. So buying Ethereum now is a bad idea for a swing trade or something like that. Day trade, hey, it's a different story. If you're looking at it as an investment though, well, then this is a situation where you'd have to go small. Because again, how would you feel if you invested $5,000 worth and you watch this thing go back to 1704? You could have waited, right? So this is where you take a small portion of what you want to invest and you compensate for this extra risk by going in smaller here. The levels I like for Ethereum would be mid-range or range low. I mean, mid-range would be aggressive, but at least the trend is generally bullish, okay? Range low is like 1,400. So can it get there? It's possible if Bitcoin fails. So something to keep in mind. If this thing breaks out, you could see like the 2,300, 2,400 area, but there needs to be a significant catalyst behind it. I'm not willing to take that risk, okay? I don't like these type of breakout trades. So I would not touch this thing. Now, if you're long from lower prices, there's actually nothing to do here. If you've taken some profit off the table, which I hope you have if you're long from lower prices, locked something in, then you just let this thing ride and see how it plays out. Okay? Just because we're at a resistance doesn't mean we're going to turn. It's really about evaluating for a new position. All right? That's where the risk is. A lot of risk for a new position. Okay, so thanks for asking about that. Kavi, can you please comment on ETH BTC? Although I doubt this gives any information. Okay, so here's the thing with those, right? So Ethereum against Bitcoin. I don't like these cross pairs because for one, Bitcoin is not a stable currency, as we know. So these cross pairs, the levels and what you see is going to be very random. So the charts aren't very reliable. We could look back and say, oh, but there was a support over here and we could have bought it and blah, blah, blah against Bitcoin. Right. But if Bitcoin does something wild, these levels, it's like they're not even there. Right? So that's why I don't like playing that game with these cross pairs. I like to evaluate against the dollar. But if you want to look at this from a technical point, I mean, you do have this support that held at 0.03 BTC and it's trying to push higher. Looks similar to that Ethereum against dollar chart, sort of, right, with this just elongated move. But you're going right back into this range high right here. So I wouldn't buy this thing against Bitcoin either. I mean, there's just no reason to. All right, if you're going to play that game. But again, I prefer to make those evaluations on charts against a stable currency like the dollar or Tether or whatever, not against Bitcoin. Some people, they have no choice, right, and they get into some of these things. But I would rely on the stable chart, not the cross pair chart for levels and decision making. Okay, so thanks for asking, Michael. EUR USD. All right, good question. No one's asked me about euro for a while. These forex pairs, at GreenBridge, we share forex trade ideas, but it's been a while since we've sent any out. It's because, as you can see, the market's been very erratic since like November, and sometimes a market is just out of play, and there's no point in forcing trades in it, especially when there's better opportunities in other markets. So we haven't really called anything, right, in these things for a while. I was going to send something out on dollar franc the other day, but I just couldn't get it out fast enough. So here's the thing. The euro's in this corrective, you have this corrective structure. Now, the big question with the euro is, what's the story with the dollar, right? Is the dollar going to continue in its what looks to be a new bullish trend? Or is the dollar just going to fake everyone out, right? Which means the euro would be in a great location for a long. So it's really, the location for the euro is attractive. I mean, look at this price action. Looks similar to gold, okay? So I like the location for a long as far as the euro goes. And I'm talking about bigger picture because look at this structure, right? That's not bearish. There's nothing bearish about this. People will look at the recent candles on their 4-hour chart or their 30-minute chart and, oh, the euro's in a bearish trend. I don't know why you're buying it because it's going to go lower. Well, no, the bigger picture is bullish and the bigger picture carries more weight, even though recent price action is corrective. So you have to keep an eye on those bigger picture levels because that's where you get short at the wrong price and you short right at the bottom. So I'd be looking, believe it or not, I'd be interested in a euro long, all right? What do I want to see for that? Let's see. Well, you have the level, right? Now you took out, we have this yesterday's candle was sort of an inside bar, not exactly, at 1760, and we took that out today. So, I mean, right now, this isn't a bad place to give the euro a try, right? Now, the thing is, the bearish structure is still in place. So there's two ways to go about this, Michael, as far as a swing trade goes. You can look at the aggressive long, which is basically would be in play now, and your risk would be defined at 1704 is the low. So you figure 17 even, maybe 1695 to give it a little room. That's where like the stop would go. And your first target would have to go, what is the price now? 1769. So you're looking at about 70 pips of risk. So you need to make at least 70 pips, right, on the first target. So what is that? That would be around, what, 1830 or something? So and this low, where's this low? Look, 1835. So that's kind of in line with this area here, right? So that's where you'd be looking to get out of some of it if you were to take such a trade. That would be an aggressive long. Why? Because the momentum, the bearish momentum is still intact. Once this thing starts taking out resistance levels, like right here, then that's when you could be more confident with a broader bullish move. But we're not there yet. So this could be the early part of it, just like gold, very similar. And I would consider that an aggressive trade. Nothing wrong with such an aggressive trade. It's just I would be quicker on taking the profits because what if it doesn't take out that lower high? It may go for another low, right? Just like gold, we didn't keep buying more and more or kept taking those long signals. We waited a bit until a much more attractive level. And as you saw, gold kept pushing lows. We had a couple of trades in that. We got stopped out, but we didn't keep getting in more and more and more, right, to control for that situation. Anyway, so thanks for bringing that up. I like it as a long. David, why not call trade when we were at support? You had 50. Okay, David, good question. So Bitcoin. I didn't call this trade back here at 50K. I remember David asking me about that trade, and I didn't call this because I didn't like this candle. I didn't like this candle right here. Right, so we were at the right level, but I didn't like the way that candle was developing. Right, I didn't see a pin bar, I didn't see an inside bar. All we had there was this doji-like, spinning top-like. It's actually more like a spinning top-like candle. So that was not adequate. Right, even though the market went the way it should have off of the support, I wasn't willing to share that because I thought it was inadequate. You have to keep in mind something, David. I'm very conservative, and I'm even more conservative when it comes to sharing ideas with members because I don't want people getting overexposed. I don't want people over trading. I don't want people being overreactive and all that type of stuff. So that's why I'm very careful. The criteria really needs to be like right on for me to send it out. All right. So that's why I didn't call that. And hey, like I said, we're not going to catch them all. So that's why, you know, we let this move go. But hey, no problem, because there's always another move, right? Just have to wait for another test of support. If I see the support come again and I see something like that again, I'm more likely to call it. Why would I be more likely to call it a second time than here? Well, the reason is that would be a clear-cut double bottom. Okay, that would be clear. This here is not a double bottom, right? This right here is just a single bottom. So if we had another one of those, like over here, that would be a double bottom, and I'd be much more confident about calling something like that. Okay, so good question. Hey, HS, good to see you. All right, so Kavi, why is the resistance in the middle of the top two? So Kavi, what I'm not sure what you mean by that. Can you clarify? Are you talking about on Ethereum, or why is the resistance in the middle of the top two wicks? So can you please clarify that? Karthik, main question I wanted to ask is how you would confirm breakout. Well, that's a good question. So, well, let's go back. I'm guessing you guys are referring to Ethereum. Okay, so let me go back to Ethereum. Let me get my Ethereum chart back on here. And here, just give me a second. Where's that Ethereum chart? Hold on. I'm just going to get my Ethereum chart back up here. Oh, that's Ethereum against BTC. Here we go. Right? So two questions about this. One, the first one here. Hold on. I see a question about DOT. Okay, so I'm going to get to these. Hold on a second. Okay, so that was 0. Okay, so Isaac, I'm going to get. I didn't see your question, Isaac. I'm going to get to that. So no problem. So Kevin, so Kavi, hold on. Why is the resistance in the middle of the top two wicks? All right. The middle of the top two wicks. Well, all right, you're talking about back here. You're probably talking about back here, right? Well, the thing is, you can't give these things exact levels, right? That's why I don't put my resistance lines right at the top. Like everyone else will put it here. Like, oh, it's up here. Yeah. But the thing is, markets are far from precise. So I like to think of it as more of an average resistance, right? Because look, we had a couple of tails over here on these two little candles. So obviously it's the general area where people are looking to sell, not an exact price. So that's a good question. And I always look, that's why I always refer to these as areas and not a single, hey, the $2,000 resistance, right? It's an area. So it's around 2000. It could be 2050. It could be 1950. It could be that anywhere in between. That's what you have to keep in mind with these. Everyone wants absolutes, but markets don't work in absolutes. So we have to embrace that. Okay, so good question. Let me go back to Isaac here. Can you check DOT and AVAX? Sure. So DOT was a trade of the week that we sent out a few weeks back. Okay, nice little move here. Let me see. Can I find my trade of the week? Let me see here. I think it's a Binance chart. Let me go back. I have because I have the levels on the chart. Let me see. Is it USD? Hold on, or maybe it's Bitfinex. Yeah, there it is. This thing may have gotten stopped out. Let's see. The stop loss was at 31.50. No, wait. Hold on. What's this over here? Low 29. I think this was stopped out. 28. Yeah, this was stopped out, right? Because the stop was at 31.50. I called this thing back here on this pin bar, and this thing stopped out. Link also stopped out, right, in a very similar way. So anyway, hey, not these things all don't work out. It's frustrating to see something like that when it stops out and then goes back up your way. So to answer your question about this, what about DOT right now? Well, here's the thing. So you're going back into the range high, right? And obviously it's following Ethereum and the rest there. This is a risky area, just like Ethereum. People have sold before here, and look, current candle trying to sell there a little bit. It's not a red candle, but they're trying. So I wouldn't buy it here. If you're not in it, I wouldn't buy it. If you're still in it, hey, not a bad place to reduce risk and lock in some profit, right, in case it doesn't break out. But that's something you have to decide. Or if you want to give it that chance and see if it breaks out and you're in from a great price, hey, you can give it that chance. But location here is not favorable for new longs. For new longs, I would wait for another retest of the range low if it wants to provide that. And that would be that area there, the 32s, low 30s area. Okay, so that's DOT. Very similar situation to Ethereum. Now, AVAX, AVAX USD. This thing, look at this thing. So a lot of altcoins have done something like this, right? Where they go nuts, right? You go on YouTube and they tell you how you're going to be the next millionaire and blah, blah, blah. If you buy this thing right now and blah, blah, blah. And then it does this over the next couple of months, right? All this, which it goes nowhere. And a lot of people just sitting there watching it go nowhere and melt away. So right now, this thing has been in a consolidation. Okay, fine, no problem. Consolidations aren't bad if you're, not in it, or if you're in from a good price. Here's the thing. Broader trend is still bullish. We can argue. Your support, your range support is around there, which is around 24, mid 24s. What is that? 2460 area. So that's not a bad area to be looking for some if it can test it again. With some of these things, a lot of these altcoins, they're like all over the place. So charts are going to be a lot less reliable, especially since a lot of them follow Bitcoin and all that stuff. So in these situations, you have to have the courage to step in front of the level. And if it breaks, that's a chance you have to take, right? So like in a situation like this, the level is around 24. 24s, so you step into some there. One way to compensate for that is you just step in smaller, right? So if you were going to buy 100 coins, you buy 25 coins or less, right? So that if it breaks, you're like, all right, let's see if it holds after it breaks. If it holds, then you can buy some more. But in this situation right now, based on this chart, you're in the middle of the range. So buying it around the middle is a very 50-50 proposition. It might go higher, it might not go higher, right? And the chart's not going to tell us which way it wants to go. All we know is the general trend is bullish, and at some point, theoretically, it should break higher, all right? But here's the thing with these coins. Once this froth runs out, because at some point it's going to run out. We saw it run out 2 years ago, and these things went into the garbage zone for 2 years and produced nothing. If we see that, you're going to see the supports break. And then these things are going to give back a lot of their value, right? If these things go out of flavor. That is what you have to be careful of. Just like the EV stocks, just like the pot stocks back in 2018. I remember the pot stocks, CGC, the rest of them, they were saying, if you looked at the news or read articles, CGC was the next Bitcoin. Okay, CGC was going to do this and that and this and that, and pot is blah, 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 and pot this and pot that. Yeah, well, CGC went to $7, okay, over the next 2 years. It was like at 50 or 60, it went to $7. So much for being the new Bitcoin, right? So when these things go out of flavor, they go out of flavor. So that is what you have to be careful of. Don't treat these like high quality stocks. Treat them like penny stocks, and just be aware that no matter how great their projects sound, no matter how smart the developers are, no matter, if money comes out of these things, it's going to come out of all of them. Okay, so just something to keep in mind. It's a cycle. It's a market cycle, and it's just a natural process. So it's just something to be aware of. You don't want to get overexposed in these. I think the best way to play a lot of these garbage coins is you throw some money at them, right? You find ones you like their idea. Maybe you know the developer. Maybe you're involved in their chat group and you're finding out inside information and it's exciting. You throw your money at a few of them and see what goes, right? But you're only throwing a couple of hundred here, a couple of hundred there. And if something goes and your couple of hundred turns into a couple of thousand, that's a home run. You should be happy with that. But people aren't satisfied with that. If something runs like Theta, right? Theta token, which I don't know, these things start to get out of hand. I mean, something like Theta, which you could have gotten for a couple of cents. We had Alice in our chat room. Alice mentioned this way back when this thing was worthless. Okay, and this thing went to, what's the high here? $15. So, people see that. Imagine if I invested $10,000, which is all I have. Imagine if I invested that at like a penny. I would be up $100,000 right now. I got to find the next one, right? That's greed talking. And that's asking for trouble. That's going to the casino, all right? Because that's not how people make big money in these things. You get some people, it happens to work out that way for them. But that's just a bad habit that will lead you to losing money in the long run. You don't make money that way, even though it may work one time. One time doesn't count in this game, all right? So just something to keep in mind with these. That's how you have to treat them. Don't let greed lure you into that mentality, that gambling mentality. Okay, so let me see what else we got here. All right, so that was Dot and AVAX. Really long answer there. Kavi, okay, so I answered that question. Karthik wanted to ask how you'd confirm breakout. Okay, so Karthik, let me address that. And let's go back to, okay, we can even use something like Theta, or let me see, how about Bitcoin? Because, Bitcoin is a potential breakout. Why is this thing's getting slow? Hold on a second. Okay. So let's talk about Bitcoin because and Ethereum looks similar, right? So Karthik's question is, how do we confirm breakout? Well, first you have to have a level, okay? The level in this case would be the peak, which would be over here, which is what, like 61K or whatever? So that would officially be the breakout right there, if it can clear that. But, breaking, going to 61,500 is not the same as closing at 62 or 63, right? That's really when it's confirmed. Now, you may get a little tight consolidation over these current candles, break the high of that candle, that would be like a mini breakout, and then you'd have to hope it goes for the broader breakout. You have to take a lot of risk in that situation, or you have to be very nimble, because the thing is, what you have to watch for, it may try to break out, all right? By the time it confirms, you have to be in it. You can't get in it once it confirms, because now you're getting really bad prices, right? And now you're running the risk that if it looks like it might confirm and then fake out again, now you're caught. So you have to take the chance that it's going to break out before it breaks out. And then once it confirms, you need to be in it, right, before that, and then prepare to sell. That's what the smart money does, or that's what a professional trader would do. Not buy it into that breakout, because the risk is just too high. So it needs to basically clear a level and then close decisively above it. Once you're in that situation, now you can sit back and let it run, because now you have a confirmed breakout, right? So people want to trade the breakout, but it's really, the breakout is better to just be in before and then let it do its job, right? People that buy that breakout are the ones that keep it going. And if there's a fake out, now you bought at the worst possible prices. So you have to be, in those situations, you have to be very nimble, and you have to get out, all right? And that leads to a lot of churning. So, you may say, oh, but I have a solution. I'll just look at this at a 5-minute chart, right? So when it breaks out and it turns red, I'll just get out. You'll have like 100 trades, right? And you can't, it's not practical. So that's the game you have to play with that. So if you buy into something like this and it turns red, the candle turns red and starts taking out daily lows, you're probably in a fake out, and that's when you should probably take your loss. But you shouldn't be putting on like 50 trades. You shouldn't get in, get out, get in, get out, get in, get out. You can't, your costs will be ridiculous. You can't make money that way. All right, so anyway, good question. Let me see what else we got here. All right, so David says, I day trade. Oh yeah, that's fine, David. For that type of trade, buying something like Bitcoin at 50K and taking a bite out of it, no problem. Day trades and swing trades are completely different strategies, as you know, because you're in the chat room and I say it in there all the time. All right, so HS, okay, cool. Hi HS. Anthony, can you check ECH? Is that a coin or is that a stock? Let's see. I'm not sure what that is. I'm guessing it's a stock. iShares, Chile. I don't know if that's correct. Let me just check the coin. ECH USD. Is it a coin? No. So I guess it's a stock. ECH. All right. So if this is the correct symbol here, I'm going to check in the chat. If you could just put it in the chat, I'll start running through this. And if I see it's not, then I'll switch. All right. So here's this thing, ECH. Nice trend, right? Higher low. You have a higher low there. You have a higher low over here. Okay, beautiful, right? Higher low over here. All right, nice. Now, you have resistance right here, which is at 34.63, and you have an attempt here at a breakout. So this is a great example to follow up on that breakout question. This is an attempt at a breakout. Higher low should lead to a higher high, theoretically. So if you're in this thing, I would give it the chance to break out. If you're not in this thing and you're looking to buy that breakout, well, that speech that I just gave on breakouts, you should consider, because it can still fake out in this area right here. You have to be careful of that. You have this red candle close, but this is a kind of a sporadic chart, so I wouldn't really put a lot of weight into these candles. But if it can clear that 34.60 or 34.50, this thing is probably on its way to a new high. So if you buy into something like that and it turns red right away, and next thing you know, you're taking out these daily candle lows, you should probably get out of it for the loss, because you're probably caught in a fake out. Something that breaks out, because again, we're talking about momentum, price momentum. So if you buy into something that's breaking out, it should continue if there's bullish momentum there. So if there's not bullish momentum, that means you're taking out daily lows and stuff like that, which means, you know, everyone else that bought that breakout are also, they're all going to be banging it out at the same time. So you don't want to get caught in that, right? And you have to, the earlier you could take the loss in that situation, the better. That's why I don't like that method, and often it leads to a lot of trades, or a lot of churning. So I prefer to buy the support or buy near the support, right, where probability is in your favor, and then when it reaches that breakout level, you have the luxury of letting the market do its job and sit back and watch, as opposed to the anxiety, should I get in? Should I get out? Is it going? Should I get in? Should I get in? What should I do? What should I do? Right? So I don't like, I've been doing this long enough. I don't like to do that. So but that's up to you. Some people don't have a problem with that. Anyway, so I like it. I mean, I like it as a potential breakout there, you know, if you're into that. So thanks for asking about that. Let's see what else I got here. So that was ECH. Okay, Michael, also, if you have some time, SPCE for a swing trade long. All right, so Henry was talking about these SPCE. Henry was talking about these stocks the other day in our show, because I guess ARK has like they put an ETF together, which has a bunch of these space industry stocks in them, which is interesting. I think it's very interesting because it's such a young industry. So now, Michael is asking about this for a swing trade long. All right, here's the thing. Let's look at some levels. Now, broader trend is bullish, right? That's pretty clear. We can see that. Recent price action is more consolidated. Man, this thing is just not cooperating today. Okay, so this is a consolidation there. We're fighting against a lower high, which was established right here at, what is that, 34.68? So as far as a swing trade goes, at this point, I mean, this is not something I would be interested in or attracted to right now, because you're in the middle of this little gyration, this little range. So why take the risk here? I would rather see if the market will give me a range low. All right, so this would be the more high probable price, the high probability price, which would be around 27s, mid 27s, maybe 26s, somewhere in that area. I mean, look at this nice pin bar. Look at this nice pin bar bottom, right? So somewhere in that range would be where I'd be expecting buying to come back into this market, right? Those would be the most attractive prices and most favorable. Otherwise, if this thing just wants to do a lot of nothing and then start working its way up, then you're looking at a range breakout situation, which would be here. All right. Taking range breakouts, I mean, again, like I talked about earlier with that breakout, you know what to expect with something like that. But that would be the range breakout play at 36.5, basically, right? So which price would you rather have, 27 or 26 or 36? I would wait for the market to deliver that lower price if it can. And if not, you know, there's better charts out there also. And look at this, you have this resistance back here too. Also, you know, with these things, you can also consider, since these are such long-term type of plays, right? They may be even good for buying some inventory, which means you could buy it at any price, right? It starts to break out and you say, okay, you know, I'm going to buy inventory instead of making it a swing trade. You just take a small position on that breakout and see where it goes, right? And if as it starts developing new patterns, you can then decide to add to that position at some point in the future, right? And at least you're in something that's winning, right? That's the way to play that game. But it's two different mindsets, right? So Michael, I know you know the difference. You've been in plenty of our trades, plenty of our swing trades, plenty of our position trades. So those are the two perspectives I would have on this thing. And the only reason why I say that position trade stuff is because of their long-term potential. Okay, so let's see. I like Shay Shank's question here. Please look at garbage coin XRP. Shay Shank knows. Shay Shank knows what I like to call it. I guess he's been following me long enough to know my opinion on some of these things. Garbage coin XRP. So, I mean, this thing, the reason why I call it such a garbage coin, look, it's one of the higher capital market cap coins, right, in the coin space. You always see it up on top of the list there with Bitcoin and the rest of them. And look at this thing. There's no trend, all right? We have a range high area right here. Here, I'm going to point out the range high. Let me draw a line there. You have a range high area right here, okay? You have a range low. You have one here, and you have another range low over here. So this garbage coin is stuck in between this range. And look where you are relative to that range. Look where you are. Price action is just fooling around up here. So if I was long this thing from much lower prices, if anything, I would be reducing risk here and distributing risk near a range resistance, especially in light of Bitcoin, near its highs, trying to break out. Ethereum is near its highs, trying to break out, and this thing can't even get through a range resistance. I don't like that relative weakness. Now, we've seen many coins similar to this before they all broke out. But after this breakout that we've seen in this huge run of these previous few months, and XRP hasn't participated, what's the problem here, right? Why isn't money flowing into this thing? So those are all red flags. So I would be reducing risk on this. If you wanted to buy XRP, this one especially, I'd wait for the range middle or range low. And again, this is not a good one for swing trades because, I mean, just let's look at the price action going back to, what is this, March? February, going almost to early March, right? Fourth week of February. This thing was at 41 cents, and right now we are at 56 cents. So this thing moved, look up, 14 or 15 cents in a matter of 2 months, or over, not 2 months, about like a month and a week. That sucks. There's been so many other opportunities and so many other coins that have moved in such dramatic ways. And you have to sit there and watch this thing like watching paint dry, right? So not a good candidate for a swing trade. If you're gonna get involved, I'd look at it as a position trade and only at those lower prices. Otherwise, I'd leave it alone. Okay, if you don't have any. All right, so good question. Thank you for asking. Let me see here. Shay Shank, altcoins are too risky or just gamble because most of them are garbage anyways. Right, so well, Shay Shank, and I agree with that because a lot of them, they have all these high hopes and a lot of this, great grand promises, and the developers are going to do this. And I also realized a lot of them are incentivizing people to buy and hold them, right, with this staking situation. And we've had some people talking in our chat about staking this with Pancake and blah, blah, blah. And I think that's all very interesting because a lot of these developers probably realize in order to keep investors in their coin, they need to give you some sort of incentive. So if you stake your coin, obviously it's like you're going to be earning interest, right, on your coins. That's the whole idea. But so you're forcing people to hold your coins or incentivizing them. Okay, fine. But at some point, though, when the cycle turns and money starts coming out of the space, because it will happen just like the rest of them, are these holders going to bang out? Are they going to dump their coins on everyone? I mean, I don't know. So that's, I think, why we're seeing a lot of these coins going nowhere, because you have people staking and no one's selling, right? But Bitcoin isn't selling either. So the leader needs to sell off. There's no sell off here. I mean, look at this, right? That's not a sell off. So when Bitcoin starts pushing important support levels, if it can do that, then I'd be very curious to see where these altcoins go. Okay, and I think that's where we will be enlightened to the ones that really matter and the ones that don't, because investors will let us know. If there's any institutional investors getting involved in some of these junk coins, their money will probably stand out, right? While everyone else is banging out of all the garbage ones that are just a joke anyway. So again, treat them like penny stocks, and then we'll see when Bitcoin has that pullback, and it will happen. And I know it doesn't seem that way, and it's been months and months and months, but a lot of times it comes out of nowhere. No one expected Bitcoin to go to 3K after it touched that 20K peak, back in 2017. No one expected that, right? So just something to keep in mind. You always have to keep an open mind. Anyway, all right, enough of that rant. Michael, regarding SBC, I wanted to wait for the range breakout and buy if it would retest the resistance now support. Oh, so Michael is, okay, Michael, and there's nothing wrong with that. That's a more conservative breakout strategy. Basically, it breaks out first and then retests, right, the range high, which is a resistance now, which would be a support at that time. That's fine. Requires a lot of patience, but there's nothing wrong with that. The hardest part of that, Michael, is watching this thing run and then, may not pull back, right? That's what you have to be careful of. That's the tough part. But one thing you can do if you want to compensate for that possibility is when it's breaking out, perhaps you just take a smaller position. So if it breaks out and never pulls back, hey, at least you got some. If it breaks out and pulls back, hey, now you can add to your position, right? So it's sort of like a combination between a swing trade and a position trade. I would recommend that for more experienced traders. I think you have enough experience now to handle something like that. Okay, so good question. Let me see what else we have. Can you see oil? Shubham asks for oil. Yeah, so let's take a look at CL1. This is the futures. I was looking at this the other day, the crude oil futures. And this will be the same for the CFD, right? And many energy stocks obviously will have a similar type of chart. Oil or energy is a significant part of the S&P, right? So this may help explain some of that S&P strength. Look at this. I mean, clearly bullish trend, right? Recent price action has been somewhat consolidation-like. So, and I was looking at this because there's a potential head and shoulders in there, right? You have the head over here. And if you notice, the stock market kind of had a similar situation, right? The stock market peaked, like a month ago or whatever, pulled back, fooled around, and now it's trying to be bullish again, right? And look, oil has a very similar type of situation. So this may be, a connection that, we don't really, I don't pay a lot of attention to oil, but there could be something there. Now, today's price action on oil, a strong bullish close, just like the NASDAQ, just like the S&P. Oh, what a coincidence. All right, now on top of that, there's a higher low in place over here, which is what, 61.22. So if oil breaks out, okay, which it looks like it's going to try to do, then that may also be another factor in the rally. Now remember, oil is going to respond to a weakening dollar. Let's see, like DX, let's take a look at the dollar real quick. So now look at the dollar, right? So oil should respond, anything that's priced in dollars should respond like that to a weakening dollar. Is this a weakening dollar? Well, we have this price action here, which is just a selling candle or a sell signal off of a higher high on the dollar. So the question that the market needs to answer is the dollar out of its bearish trend and is it in a bullish trend now? People that watch 5-minute charts are going to argue and say, hey, it's in a bullish trend. Okay, in the short term, recent price action, yeah, we have some higher lows, we have some higher highs, right? Nice higher low here. We talked about this trend as it changed. By the way, people that have been asking about topping markets or bottoming markets, if you notice, the dollar bottom occurred at the beginning of the year, right? But it wasn't obvious at that time, only after the fact. If you notice, the confirmation came in these higher lows, right? Which took another 2 months. So that's a good example of how a market top or market bottoms are often a process. This took 2 months. It's not a single event. Right? People are always looking for a single event, like, oh, the market top, the market bottom. But it's usually, it takes a lot of time. So my point is, we had this reversal in the dollar, and the dollar is back at this resistance area. Now, the dollar has been proven some strength in recent time, which is a deflationary sign, not an inflationary sign. That's why we have a lot of this market conflict, I think, right? A deflationary market means strong dollar. An inflationary market means weak dollar. So here's the thing. With this dollar trend, it's a little confusing, right? The dollar should be, in a truly inflationary market, the dollar should be pushing lows. Why did it turn? So what the dollar needs to answer is, does it resume this broader bearish trend, which it has been in for, we could look back a few years here, okay? I mean, look, going back to 2020, right? I mean, going back earlier, the dollar has been generally bearish. Only recently we've seen this improvement or change in the dollar momentum. But we're back in this resistance area. So does the dollar break this higher low support that we have here and resume the bearish trend? Does it break this support? If it breaks that support and we resume the bearish trend, then okay, that's the inflationary environment. NFP may help to give us a clue tomorrow about that. Because remember, the Fed uses NFP as an inflation gauge. Something to keep in mind about the Fed. The Fed is not inclined to tell us the truth. Okay, there's been evidence from previous Fed chairmen that basically said that, and there's a video somewhere. The guy said that he couldn't tell the truth of what he thought because he had to play he had to play nice with the political party and the administration and all that kind of stuff. So these government people, they can't just say whatever they want, and they're not out to help us either, right? So there's different things going on that we don't know. So my point is, we can't trust what they say. The Fed right now says that there's no inflation. Meanwhile, you look at commodity prices and they're all making new highs, right? So that's a form of inflation. The dollar has been telling a different story also. So again, my question is to the market: do we break the support and go lower? Then we have inflation, which means stock market should go higher, which means gold should go higher, and Bitcoin should go higher. Any anti-inflationary thing should go higher. But if we have deflation, which means interest rates go up, which doesn't look like it's happening at the moment, then dollar should go higher, okay? And dollar needs to break this resistance area right here, all right? So just some things to keep in mind to give you some longer term perspective on some of these things. That's why, when we have these conflicts in gold, I watched an expert, like I was saying the other day, I watched an expert talk about gold, couldn't explain this massive gold pullback that we've seen. Couldn't explain it, just called it a technical correction. Okay, that's nice, but that's not a very good answer. So this is why people are always searching for answers. Just accept the price and accept the patterns, because there's money out there, smart money, that knows things that we don't know. And if they start putting money on the line, right, markets will start to reflect that. And that's where we can get real actionable information from, right? So that's why you need to keep an eye on things like the dollar, things like the bond market. You don't have to trade them. You don't have to be an economic expert. You just have to watch their trends, and if their trends are changing, because these will affect the other things that we trade. Okay, so that goes back to oil, right? The oil chart, and again, with the oil chart right now is reflecting inflation, but we have to see what that dollar does. Like I said, if the dollar breaks lower and goes back into that bearish trend, I would expect oil to go higher. If the dollar stays strong and holds supports, I would expect oil to go lower. So I wouldn't touch oil right here. All right. So to answer that part of the question, I wouldn't touch oil. It's in the middle of this range. Let the dollar figure itself out. Okay. Oil could be a real pain too. Remember, there's a lot of sophisticated, smart money in oil. So you have to be very careful. And the thing that you need to avoid the most in something like oil is reacting especially to news. All right, so good question. Let me see what else we have. CWRK, Caleb, sure, let's take a look. And I'm going to wrap this up in a bit, but great questions. CWRK, let's take a look. CWRK, is that the right symbol? Currency works. That's interesting. Speaking of the dollar. All right, so nice bullish trend. I see higher lows, higher highs. I see a range support at $2.62 low, around there. I like that. Is this a Canadian company? It's in Canadian dollars. Do I have the right symbol? Yeah, it looks like it's in Canadian dollars. Okay. So I see the range low around there, and you're fooling around like in the middle of that range. So here's the thing, with something like this, since it's so inexpensive, I mean, you're looking at $2 or whatever it is, $3. If you want to bet on the broader trend, then hey, you know what? You're going to define your risk at around $2.50, around there. If you're buying this thing now, you're risking about $1, and then see if it breaks out, right? Because I mean, you're not at the range high, you're sort of in the middle, but you're kind of near the low, right? So it's not a horrible area, but again, it's something that's so cheap like this, I wouldn't put a lot of weight on the candles. I would just say, okay, look at the general area. You know, you had a green candle yesterday. Today it closed a little red, but it didn't take out the green candle low. So, you know, it's in a buyable area. You just have to put your stop, you know, like I said, $1.50 away, and then hope you can make that $1.50 or $2 on the next, you know, leg higher if it can break out and produce that. If you test the high, you're looking at 463. So if you buy it around 325, 350, you're looking at about $1, and that's at like an attempted breakout. You're looking at $1. So it's almost one-to-one risk reward. Of course, I would expect it to go higher since you have a higher low in place. So it may be worth it. It's aggressive, but you know, if you really like it, I could see the argument there. Okay, so thanks for asking about that. Oh, Caleb. Okay, I'm sorry, I didn't see it. Oh, yeah, I see it now. I'm looking back. Okay, yeah, sorry. Sometimes these chats go fast, and I miss them sometimes. So I apologize for that. Okay, cool. Thanks for re-sharing it. Okay, Theta Wela. Okay, LTC. Okay, cool. I'll take a look at that. Shubham, you're saying you see a bear flag on oil? All right, well, I'll take a look at that here in a moment. Caleb, company that helps other businesses create their own ICOs. Ah, that's interesting. So if I want to make an ICO, I can go to them and I can start the GreenBridge coin or something and come up with some kind of really amazing thing that it can do, or really just a lot of nothing, and try to get everyone to buy it. Okay, that's interesting. Thanks for mentioning that. Price action has been following Bitcoin and other altcoins. Well, yeah, I mean, look, the trend is there. You know, so obviously it's going to be a reflection of the space. If money comes out of the space and the space is no longer the flavor of the week, this thing is going to start to turn to garbage or just stay in that consolidation, all right, and stop making progress. So just something to keep in mind there. Okay, cool. So thank you for mentioning that. All right, so let's go back here a bit. Litecoin. Thela wants to see Litecoin. So let's take a look at Litecoin. So Litecoin has been in it's a similar situation like Ethereum, right? It's a Bitcoin follower, and this is a consolidation right here. The trend is bullish, right? No question, higher lows, higher highs. Looks similar to Bitcoin, all right? So that's established. You have the range middle. You're in the range middle right here. So this is a bad place to buy it, all right? I would not buy it. If you're in it, this is not a bad place to take something off the table. All right, just a little. You don't have to take a lot because you're not at the range high. The range high is really why you want to take more off the table. So just for example, if you have 10 coins or 100 coins, you know, in the middle here, maybe you take off 10 or 15 coins or something. But at the range high, maybe you take off 30 coins or 40 coins, right? A much larger position. You want to reduce your risk at such levels. So here I would do nothing. If you're not in it, I would do nothing. I would wait, just like Ethereum, just like Bitcoin, I would wait for the range low. Remember, we're in a consolidation. These consolidations could be trend continuation patterns, but you have to take a lot of risk for that breakout. And there needs to be a serious catalyst in something like Bitcoin for these things to all to go. A lot of times they try to go, suck a lot of people in, and goes back into the middle of the range. And there's no way to know how many times this thing's going to gyrate until that breakout occurs, right? And also, there's no guarantee that it will break higher. Just let me show you a case in point here. We look at gold, right? When we go back to August in gold consolidated, right? And that should have been a triangle to go higher. Look at this back here in gold, and it went lower. So there's no guarantee just because there's a trend continuation pattern there that it will continue the way we think. So just something to keep in mind. Remember, this is all a function of risk. Risk first, right? And risk is most favorable and probability is most favorable at the range low. So see if Litecoin will deliver that range low. If not, I mean, if you're buying it here, you're taking more risk. Again, I'm talking from the swing trade perspective. So thank you for asking that question. Great question. Okay, let me see what else we got here. Kavi, can you please look at HSCEI ETF. Okay, hold on. Let me see. What is that? 2828. What is that? Is that? No, that's not going to work. Let me see. HSCEI. Hold on. That's Hang Seng. The Hang Seng ETF. Okay, so this is the Hang Seng Index. So you're talking about an ETF based on this. Let me see if I could find that. HSCEI. Let me see if there's an ETF here on my list. 2828. There it is. Okay, right here. So, all right, look, the chart looks exactly the same. Okay, so good question. The Hang Seng Index. This is like like their version of the Dow, right? Something like that. So let's look at this, right? Broader trend has been generally bullish. Look at this corrective move, right? Interesting corrective move here. Now, let's take a look at the levels. So this is interesting. You have this old resistance, new support area, which it recently bounced off of. Interesting in light of how the S&P and NASDAQ bounced, or I should say the NASDAQ bounced. Potential lower high over here. So look, what you have here is a failed low. This is a failed low, pin bar. Look at that. That would have been a great buy signal. We don't watch the Hang Seng, but that would have been a great buy signal. If you're not in this now, you missed it, okay, for a swing trade. This is a place where you should be looking to get out if you're in it, right? As a swing trade, you should be taking profits off the table at this point because it could produce a lower high. Now, I would not short this. This is not a bearish trend. What I would do in a situation like this, if you're looking to get back in or you're looking to buy this thing, wait for the higher low, potential higher low, which would be around the 110 area, something like that, or maybe it goes for the double bottom. Those would be your areas to consider for longs on something like this. Remember, this is going to be more similar to like trading like, the S&P or the NASDAQ because it's, the same type of index. Okay, so those are the areas I'd look for. Shorting this, it could be a lower high, but the risk you take is very high. All right, this thing may push higher. You have a failed low. The general trend is bullish, and the one time you short it may be the time it breaks out, right? And now you're short from a bad price, and you're like, oh no, but it has to pull back. It has to, and then it doesn't pull back, right? Your next resistance actually is all the way up here, which is around, what is that, 117 area. So too risky to short. All right, so that's the Hang Seng. Yeah, I haven't looked at this one in a while. Thank you for mentioning that, the Hang Seng ETF. Okay, so let me see. Oh, so and Shubham talked about the bear flag on oil. Let me just address that real quick, and then I'll wrap this up here in a moment. Caleb, I see a double bottom for gold during this previous resistance. Oh yeah, so gold, Caleb. Yeah, we actually sent out a swing trade on gold because of that double bottom. We're long gold now. I'll talk about that in a moment, and then we'll wrap this up. But Shubham talks about, he says here that he sees a bear flag on oil. All right, so you're probably looking, Shubham, you're probably looking at, let me erase some of these boxes so we can get a little more of a clear picture. You're probably looking at this little section right here, right? Let me make it nice and big. Right, and you're probably looking at this area here and calling that a bear flag. Don't look at those patterns like that in isolation. You have to look at them in light of the bigger picture. So although it could be a bear flag, this is more likely a head and shoulders because you have the shoulder here, you have the head, you have the shoulder, and you have a broader bullish trend. The bullish trend is really what carries the most weight, not the pattern. This pattern, which looks like a head and shoulders and should be bearish, may fake everyone out and be bullish because the broader trend is bullish, right? And we're not really taking out any support levels here, right? So I would be very careful with that. So focus more on the bigger picture. Don't get too caught up with the pattern, especially a mini pattern, which is, sort of it's not really relevant to what's going on here in the bigger picture. So thanks for mentioning that. And all right, so let me get through. Caleb, double bottom on gold. Yeah, so we looked at that. Like I said, XAU USD, yeah, we're in that. So I sent out the swing trade. This blue box here is a target zone. We got in at 1720. This thing's at 17.29 right now, so not bad. But yeah, definitely double bottom there on gold. I saw that yesterday and I called it. You can see the trade right here. That's the trade idea. So thanks for mentioning. Shubham, do you think gold will go? Well, so there's a conflict there, right? Now the dollar we saw is pulling back a tad, right? Pulling back a little bit, but we don't know if that dollar trend is reversed or not. And gold has turned itself around here. So how this unfolds is going to depend on what we see over the next couple of weeks in terms of what's going to happen with inflation, right? What's going on with NFP tomorrow and all that kind of stuff. Right now, it looks like these markets are pricing in inflation. That's why we have this turnaround in gold. Also, keep in mind, gold is going into a seasonally bullish time of year. There's a lot of demand for gold in the coming months. So it's no coincidence that this thing turned now, beginning of April. So even if gold doesn't turn to a completely full bullish trend, I'm happy if this thing can run 150 points, right? Which it can at least try to do and stay within its range. So we have to see. That's why I can't, I don't get stuck on any opinions. I am bullish on gold in general, and I do believe in the inflation story. But if the market gives me a different story, hey, I go with the market. All right, so that's why I think gold is in a position to go higher. We have to see what goes on with that dollar, okay? And the dollar will give us the answer over the long run. Shay Shank, AMD. Okay, so here's what I'm going to do. I'm going to do AMD, and then I'm going to have to wrap this up. I'm sorry. Otherwise, I'll be here for 3 hours, as Michael knows. So wait, let me just see. Thanks for looking into LTC. If time permits, can you please? Okay, so no, I'm sorry. I'm going to have to wrap this up. Tesla chart. Okay. Wait, so slow reaches potentially. Yeah, I would. So Tesla is going to be more sensitive to like whatever the NASDAQ does. And that thing is wild to begin with. So I would be careful on that. Let's take a look at AMD and then I'm going to wrap this up. Again, if I missed your question, I apologize. Kavi, if you ask that question again in the chat room tomorrow, I can address that more in more detail. So AMD. AMD is a market stock, as we know, right? It's one of the semiconductor leaders. And now this one has been relatively weak, or it's been following the NASDAQ in recent time. And look at this turnaround, right? Turning around with the strength that we're seeing in the market. There's a higher low in place, but I'll tell you, I don't like what's going on here with AMD. And although this higher low is a sign of strength, it needs to prove itself. So it needs to take out this high over here, which is around $84. And buying this thing right now is just asking for a lot of trouble, right? Because anything can happen between here and that $84 area, right? This thing could fake out, this thing could pull back. So if you want to get into AMD, I'd prefer to wait for this area here. It double bottomed the other day. We didn't call that. There were a lot of stocks on their double bottoms. There were a lot of them. And the NASDAQ wasn't looking so hot. And the S&P was near that high. I didn't trust that S&P, so I wasn't going to sit here and call 50 double bottom trades. So in this situation with AMD, I'd prefer to wait for another test of that low. If anything, I wouldn't touch it here on this type of candle. This sucks a lot of people in, and then if it doesn't go anywhere, right, it's 50-50, they're all banging it out back at that low. So if you're going to take a chance on something like this, you're better off at the low. AMD is a good stock, obviously. You're looking in those mid-70s area. If that mid-70s area breaks, then most likely the market's getting hammered. Okay, we had an old trade on this back at 90. Good thing we respect our stops. So anyway, yeah, so that's what I'd watch for on that. Don't chase these things. Wait for support or wait for the breakout. And then like Michael was talking about earlier, if it breaks out, then look for the pullback. At least you're buying into a more stable structure or bullish structure at that point. But that requires a ton of patience. Okay, so anyway, I'm going to leave you guys with that. Thank you so much for all of your great questions. Again, if I didn't answer your question, I apologize. Please come to our chat room over at GreenBridge, or Kavi, you're there. So please ask again there tomorrow, and I'll be happy to answer that question. Also, if you haven't registered for the GreenBridge channel here, please register so you get an email notification every time I stream. And also, if you like the video, please press the like button because it's very valuable feedback for me. Okay, everyone, so thank you very, very much for all your great questions and your participation and for spending time with me today here on Thursday afternoon. Enjoy the rest of your day, wherever you are in the world, and I'll see you on Monday when I stream again. Okay, so again, thank you very much, and thank you for watching.